Good evening, everybody. Matrix here, and it's October 5th. I guess it's time for me to make a recap video or kind of like a trade that I took on Friday. I haven't made any recaps this week, so here it is. Make sure you stick around to the very end of this video to get some additional insights on something I want to talk about about a tweet that I read throughout the week, and I want to talk about that afterwards. But then, right now, let's get into the trade. Okay, so this trade was on Apple. Okay, and here are my executions. I want to get into the notes real quick. So Apple, this is called the late day positive catalyst breakout trade. All right, so basically on Friday, the big picture, Apple on October 4th, Friday, the SPY gapped up on better than expected jobs report numbers, okay? And on September 30th, JP Morgan reiterated the overweight rating on Apple to target 265. Intraday, we have in the morning, Apple gap up on news that they are increasing production of the iPhone 11 by 10% to meet up with the increasing demands. That's definitely a positive. They launched the iPhone just a little while ago, and they have serious demand. So this is great news, right? The average true range for Apple is $4.50. The relative volume in the pre-market was elevated. The stock was trading about 200 to 300K pre-market, and it was moving pretty well. The institutionally owned was 61%. Daily technical chart analysis, right? Let's mark off every time I make a trade or come up with an idea for a trade. The first thing I do is I marked off the daily chart first, okay, to look for support and resistance. So daily chart resistance, we have 226.42 and 228.22. So let's take a look at that. This is the daily chart on Apple. Okay. I said 226.42. That would be around here on this day. I'm going to mark that off in red real quick for you to show you the resistance. Okay, so that's 226.42. And then the next area up, we have the 228.22 area. So right around here. I'm not going to get these to precise markings, just in and around the area so you know where I'm looking at. So it's basically the high of this candle right here a few weeks ago, and then the previous high and the 52-week high right here, right over here. On the intraday side, though, I mentioned that like there's a really big gap right in between this daily chart resistance, so I'm looking for a little bit more in between. And I notice on the 30-minute chart there's a resistance at 226.75 to 227.13. So let's take a look at that real quick. Okay. Shrink that up. Here is the 30-minute chart, and what I saw, this 226 is basically from right here. I'll mark that off in red, and right here. Okay, mark that off in red as well. And this to me was a resistance area because of this big dump day on October 1st, coming back over here into the daily chart. This is October 1st right here, this massive day. So I am looking at this area right here. Okay. And let's do the transparency, bring it down a little bit. And I'll tell you how I come out with this level, okay? I'm looking at this massive dump day on October 1st, okay? And I'm looking at the volume done here on the 30-minute chart. And as you can see, there's massive volume on this red bar right here. And the price closed right at 226.75. So if I click on it on the left-hand side here, you'll see the closing price, 226.75. And then on the next bar, when it tried to push back up and got stuffed, it basically got stuffed at 227 and change. So we have massive volume down bar, a closing price. And then right here, we have the opening price from 226.75. It got back up first, and made the high of 227.13, and then it came down and got stuffed. So this in itself, with the amount of volume done over here, this was an intermediate resistance that I'm looking at. Okay, so that's basically my resistance. So somewhere in between around here, there is a resistance area right around here. Let's mark that off with the yellow line. Okay, as far as support goes, daily chart support, I'm looking at 224.80 to 225.07, 224.60, 224 basically. So 224 to 224.20. So right here on the daily chart, again, let's bring this out. I am looking at this area. I am also looking at this area. And then I'm looking at this area as well. So that's pretty much it. All right. So if I zoom out a little bit, let's extend these lines. And you'll see why I'm looking at these. Okay, right about there. And right here. Okay, so 3 support areas I'm looking at, okay? And basically, that's how I mark off my daily chart for support and resistance. Okay, so Apple, I noticed that it was unable to advance past the 226 after 11:30 a.m. However, the price kept getting held up each time it tried to retreat to the VWAP. Okay, so overall, given the big picture, the SPY giving out positive job numbers, the SPY ran well. Prior days ago, we had J.P. Morgan reiterating the overweight rating. That was a good news. And also today on Friday, we have this piece of news that they are increasing production of iPhone 11. So that's 3 pieces of good news supporting the given thesis of that the callus. I'm leaning more to the bullish side. Okay, so basically, I want to long the stock. However, throughout the day, there was uncertainty that the stock created on the thesis because the price can't get past 226. And I'll show you this on the chart. And however, it's not a short though, just because the price cannot get past the 226 within the day. To me, it wasn't a short because even though we had the 226 resistance, it's basically not a long either. It just kept getting held up, and once you see the chart, you'll understand what I mean. So my thesis was to wait for the 226 to break out, confirm, and then get long, and then I'll be aiming for the resistance areas right about here. So let's get right into it. Okay, so here is the 1-minute chart. Blow that up real quick. So we see at the open, we have a gap up over here. Okay, so we have a gap up from yesterday's closing, and then this big candle is basically the job report numbers causing even higher pop. Okay, and then in the pre-market, it traded up, made a pre-market high of around 226.33 or 35. So this is really close to the 226.42 area I was talking about on the daily chart. And then right at the open, it sold off. Now, while it's selling off, I did take some trades in and around this morning area, but I'm going to talk about this main trade that I want to talk about over here. It's basically the long late day right here, this long. So while I was watching this, I saw at 11:32 there was massive volume. If you take a look at the morning volume from the sell-off and then right into lunch, this candle was a big deal, right? And I matched it up to 11:33, and then the high and the lows I marked off on this candle. It was basically right here, this red candle, the 225.87 and the 226.05. Okay, So this was an important candle that I was watching. And then we also see that Apple, even though it dumped in the open, it eventually got back above VWAP. You can see that it made some nice consolidation, and then eventually it broke out above the VWAP and held, right? I personally miss this entry right here. What's interesting is when this big volume candle happened right here, I found that the stock was unable to trade above 226. As you can see, every time it tried up, it got stuff, came back up, it got stuff. So if you were trying to take a trade in around this area, you would have gotten chopped out. Overall, the stock was very bullish. It reclaimed VWAP, right? And then it kept running, but then it couldn't get above. Um, However, every time it got stuffed, as soon as it came down close and near the VWAP area, it got bought right back up. So that's why it's not a short, because to me, I mean, I could short anywhere here, but I don't know when it's gonna come right back up and over into my face. So I'd rather wait out and wait until the breakout area, this little range, actually confirms instead of taking the short trade. Because I mean, you could have shorted right here and paid yourself for the scalp, and then from here you would have stopped out again, and then you try and then get stopped out. See how every time it came down, it got bought right back up really quick. So this short would have been a frustrating trade. And the fact that the stock actually reclaimed VWAP and started trending up, that means it's very strong. Overall, if you were looking at this 50 EMA though, um, this orange line is still trending upwards and sloping up slightly. So we are still in an uptrend along with the VWAP as well. This green line was trending up ever so slowly, even on the stump. So on the pull-ins here. So overall, I didn't think that it was a short. I think the overall market wants it long, and that's why I rather wait it out. And we see that basically the stock traded in around this range area, and eventually right here I finally waited it out right here at 114, 115. Let's zoom in real quick. This was where I really got interested. So it tried to pull and then pop again and then pull and then pop, and finally it got above here. And then I was waiting. Every time it got above the 226, I was just waiting for it to confirm. So for here, it popped up. It couldn't confirm and hold. And all these little candles, there was no continuation, so I didn't long. Over here, when I saw this massive volume happen, basically this was where I got really interested as it came back down and tested this 50 MA, bounced right off it, right? I was also watching the tape. Every time a breakout happens, I would watch the tape when it comes back down to the buy breakout level, right? So I was watching the tape and I basically just got long one tier right here. From here, I was basically holding it until the next level breakout. So once this broke out, I was looking at this target and I was waiting for continuation to add. Okay, so this was the breakout area. We have the breakout, the high came down, supported. Now we have confirmed that we have broken out of the range. I didn't want to hammer the size in because we don't know yet if this is still a fakie, right? It could just come back up over here and then just roll over and down. So I only use one tier, and it's also late day as well. So coming over here, as I was watching this, I saw this candle with the massive volume, and it broke out the prior breakout point, and that's where I added. But once I added, and this is exactly the same price I got in, once I added two tiers, it had no follow through. So when it came back down to near and around my entry price, I took a little bit off. I was afraid that it was going to keep coming down, just to alleviate my risk a little bit, but the idea was still on. So I had two tiers here, sold one, and basically I was still holding one tier. As the stock was coming over, and testing this prior breakout area once again. This time I waited, and I waited for the breakout to hold, breakout, hold, and then from here I saw massive volume coming in at 2 o'clock, and this is where I added. Um, I want to mark off this area, the 226.42 was what I talked about in my thesis. So I waited for this 226.42 resistance to break out first, and this is where I added half. And then basically I was holding 1.5 tier as it was running up. I talked about this resistance at 226.75 to 226, so to 227. Okay, so right about here, this is where I sold half of it, and then it came back down, and from here it had a hard time breaking out, so I basically just took it off because basically my trade idea was already done. So my idea was to long the breakout of 226 and ride it up right to 226.75. So basically that was it, and I just took the trade off. Afterwards, after I took it off, and of course it runs a little bit more, and eventually it gets stuffed, right? So obviously I didn't have a massive reason to sell here. When your trade hit your plan, it's definitely a reason to sell, but you don't have to sell everything. From here, I could have just sold half and just let this run. As you can see, it's still held, right? And came back up. But as it was coming back up and pulled back down here, I would have sold around this area anyways with the massive pull. If not, I'd probably sell around this area. So I probably only miss about 30 cents. I wouldn't have been able to hold this all the way back down to my entry. Right about here would be the main reason to sell here. Anyway, so probably just about 30 cents I missed in realistically, right? So that's basically my trade. Okay, if you guys have any questions about this, though, make sure you hit me up in the comment. But overall, that was the thesis, and let's take a look at this again. Actually, yeah. So it's basically a range, identifying a range with the volume, right? Waiting for the confirmation. I got long, added, and right here it was very, how would you say, everybody could have done this differently. They could have just held this all the way back down and risked the low of this range, right? Or they could have did like me, sold a little bit but kept the idea on because the idea wasn't broken yet. I just wanted to alleviate some risk. I really enjoyed this ad, and from here I don't mind taking it off. So that was basically the trade. Okay, as I was saying, I had something to talk about. So, over the week, I am a big fan of Twitter. I scroll through Twitter a lot, and I look at other traders and what they're doing, right, and what they're talking about. So I came across this tweet, Merritt Black, and he is a trader at a prop firm and an educator at a prop firm called SMB Capital in New York, Manhattan. And basically, he came out with this tweet. He's saying patience is almost never the issue. Um, you just think it's patience. Really, it's some kind of skill gap that you have in one, identifying the conditions, and two, knowing what to do given them. Okay, so I kind of like to add on to this tweet. I mean, a lot of times we hear people saying, "Oh, had I had a little bit more patience, or um, I should be practicing more patience and holding my trades longer." I I really don't agree with that. I mean, I think Merritt really hits it on the nail when he says it's basically a skill gap, right? Um, if you are in a trade and you're fidgeting and you sell out and you think it's patience, I personally argue it's not. It's basically you don't know what to do because you're not understanding what's happening within the price action. And that's what's causing the anxiety for people to get out their trades too early. And yeah, so with that said, I highly suggest people learn more over the weekend, study. Um, good question that people ask me all the time is, what books do you recommend reading? And I would always say the same thing. So let's bring this in right here. This book has helped me a lot. It's called The Playbook. Okay, written by a gentleman by the name of Mike Bellafury. I actually had a chance to meet him in person. He is the partner and owner of SMB Capital, which is a prop firm in Manhattan, New York. Okay, so he wrote 2 books, and I bought both of them and I read them. Basically, reading his books, these 2 books that he wrote, um, it gave me a lot of insight and helped me understand, and eventually was able to lead me to hold on to my trades a lot longer than I would. Like, I would be in a trade for an average duration of about an hour or 2, and I wouldn't sell until I actually was given a reason to sell, because I was in the trade and I understood what the price action meant, right? So getting his books, I highly recommend. In the video link description below, I will have a link to the Amazon to his books. Now, the playbook here, it's a must read in my opinion. And he has another book called The One Good Trade. So both these books are fantastic. The One Good Trade I got is I got on Audible, so I'm listening to it while I'm driving. I've already listened to it twice. It's every time I re-listen to it, I got like, I always pick up some new knowledge from it or some gold from it. The paperback is a cheaper version, retails around 65 to 70 bucks on Amazon. The hardcover is a little bit more expensive. I don't suggest you getting the hardcover. You don't really have to, right? At the end of the day, a book is a book is a book. But like I said, this is a must read. Okay, it's 400 pages long, inside jam-packed with examples of trade reviews from his traders that work at his firm. And on the reviews, it talks about each trade and their thinking behind them, why traders are staying in trades and why traders are getting out of trades. I think that's very important. And basically, yeah, so make sure you hit the like button and subscribe if you liked my little recap over here. If you have any questions about this trade, you can ask it to me in the comment section below, and I'll see you guys all bright and early on Monday. Thanks for watching. Ciao.